Hello and welcome. In the words of the great Larry King, hello and welcome and welcome and hello and welcome. Caller. No, guys, it is un poco mas. What did you think you were going to get here? Un poco mas. My name is DannyDealz on behalf of Hurricane Lopez and Stock Karen. We would like to say hello and welcome and welcome and hello. It's 11/10/2023, November 10th. It's a Friday. The market just closed about an hour ago. Topper time check. It's 2:10 p.m. out here in beautiful sunny Los Angeles today. Looks like a beautiful summer day out there. Ocean is a little bit cold, but the air is sunny and warm. Hope it's a beautiful Friday wherever you are. Guys, absolutely crazy couple of weeks for the SoFi investor. I talked yesterday about managing emotions, managing expectations, and the best thing you can do is try to analyze a company, analyze a stock, pick an entry point, and then don't have any expectations for the short-term price action. Yes, if it goes down, try to buy more, but don't take it as like a personal thing. Don't take it as, you were wrong. You should be ashamed if a stock goes down. In fact, somebody was saying that in a comment yesterday. Is like, well, you should stop making videos because you're always wrong. You were wrong. I'm like, well, I guess if price action is your religion, I'm not your pope. Price action is not my religion. I try to look at companies and analyze companies for their quality and try to find stocks that are undervalued and great companies with great management that are in the right sector, the right industry, that have the right timing, that have that potential for growth. And most importantly, just have outstanding management that can execute on that winning business model. So if I do all that and I plan and I do it properly and I stick to my convictions and I don't dump low when everybody else gets scared and panic, that strategy has been very, very good for me. Um, so in fact, I was not wrong about the ER at all. I was eerily correct. If you saw me talking to Tanner, um, I said this SoFi was going to book 3 billion in new deposits, and I think he actually laughed at me. And it came in at 2.9. Nobody else was even saying over 2.5. So boy, I feel silly there. I said 3 cents loss exactly. And granted, there was the one-time write-down, which made like 20. But that's if you go by that, you're just a fool. You just don't know what you're looking at. One-time non-cash write-down. Um, it's not something to worry about over the long term. Yes, it looks really bad on some of those like Yahoo Finance things. But then I also said guidance, EBITDA, that they're going to basically 100% guarantee the Q4 profit. There was a lot of other things that I predicted around the ER that, were, I think, right on the money. So I also said that pump and dump and pump, the order doesn't really matter. The point is you should buy low and sell high, if at all. I mean, I probably wouldn't sell, certainly not right now, certainly not in the single digits. I won't sell any shares ever in the single digits. Um, but I guess it's just, I talked about managing expectations. Like if you watch my channel, I do not have the means. I don't have billions of dollars. I'm not a big hedge fund where I can go out and control the short term price action. But what I told you is before the next ER, this is going to move up into the double digits. And I firmly believe that. And remember, we're already almost halfway through Q4. So when management's talking and Noto comes out like in the next couple weeks and Lapointe and he does these conferences and they say we're going to make a profit in Q4, remember that they already know the numbers, guys. They already can see, the first 6 weeks of numbers. By the time they're out there talking, it'll be like 7 weeks. So they're going to have a really good sense of where things are going. And they're telling us they're going to make a profit, and that's going to be good for the stock. That would be my interpretation. Now, I thought this ER was going to be good for the stock, but I want to point something out, guys, about this chart that is very, very interesting since this major pump since June, middle of June, when it just did this crazy run up from 5 to 10 basically. Um, $10.30 or whatever it was, almost overnight. Notice, guys, since that time, this is something very unusual in 4 months of trading on a stock with this large a market cap. Um, there has been absolutely no period of consolidation, save for a week here. You have the stock either going sharply down or sharply up generally at greater than a 45-degree angle literally all the time. And that's indicative of just heavy algorithmic trading, heavy mechanics. I mean, you might have a little bit of a week of consolidation there, but this is done to promote fear, confusion, and anger. How can you pick an entry point, when a stock won't consolidate? How can an institution invest in something, analyze something that's just being run by algos up and down in this insane frenzy all the time? How can you have stability? How can you ask institutional investors to come into a chart that looks like this? And people that are saying, "Oh, this is a hammer pattern," this is bullshit, guys. This is today. The stock was sitting there trading between 775 or 675 and 680, and then it stepped up in 5-cent increments. No real people have sold since $8.25. And yes, they did make money on this pump and dump, guys, since the ER. But look at the last quarters, guys. You see, um, look over here. Like, just take a look. Right here, this is a period of consolidation. Okay, this is a period of consolidation. Now you have the Chia Pet dump, but stocks usually just do not move up without some period of consolidation. Again, here, look at this one. Lots of consolidation. This chart since June has just been absolutely on this crazy roller coaster. Look at these sharp W's. You don't generally see this. And it doesn't consolidate at all at the bottom. There's no market makers here. There's no, big institutions offloading shares from, companies that are bearish and want to get out of the stock to companies that are bullish and want to get into the stock, trading in big blocks. It just hammers off the bottom of this line since June. 1, 2, 3, 4, 5, 6. 6 hammers, and nobody's buying and selling the stock down there. Just mechanics are driving it down with a hammer. It's like they just hammer harder and harder on a nail, and the nail pops right back up. There's so much tension on it. Because results matter. They cannot get the stock to consolidate at the lows of this trading range. And it's still in the pocket. I don't know what everybody's so worried about. Yes, they're hammering it off again. Yes, this candle's well below the line. This line is important, guys. If you count here, it's a bit above the line, but it is not usual for a stock to come down with this slope and hammer off of the same line 6 times in less than 4 months when you're talking about a stock with a market cap in the billions. It's just not common. That's not how this stock was trading before at all. And I think, these short market makers have had to change their strategy. They've had to go from just churning the stock at the bottom, grinding people out, to you see some institutions come in. You saw ARK come in. You saw some others come in. And so the same strategy is not working. They've had to get much, much more active, put in more money. And if you look at what happened, guys, since the ER, it's not any type of calamity. The stock is trading basically the exact same place it was trading before the ER. I mean, when was it? So it comes in here. And, you're right at the same spot. You're right at like 695. It goes up for 5 days. You get up back to like this 825 kind of level. I don't know where it actually stopped, 840, but, really kind of consolidates there, 825, pushes back down for 5 days, and then we check up. Now, are we going to consolidate around this line, break down below this line? I don't think so, because the results of the ER matter. And people are like, how can they keep ignoring these ERs? How can they keep shorting these ERs? Because, to use a baseball analogy, guys, these ERs are not home runs. We might like to think they are. We might, want to celebrate and go crazy, and everybody posts, moon and rocket ship emojis. But guys, that's not the reality of these earnings report. There are issues with these earnings report. There's a lot of costs. They've been working on the costs. They've been working on getting things down, but oh gosh, what a week. So, I mean, there's really nothing like, we're at the same exact, they drove the stock, shorted the stock all the way down to the ER. There was a slow, constipated pump and dump, and we went up the mountain, yole, 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 ooh, and we're right back down the mountain. And now I think we're going to go back up. Could we go down more? Of course we could go down more, but I don't know, guys. At 694, 689, what are the shorts shorting? What is the bear thesis? How are they going to drive this stock down into the next ER when management is all but guaranteeing gap net profit? You have CFO The Point and CEO Nodo buying the stock again. Okay, Nodo owns over 7 million shares. LaPointe owns, I think, almost 900,000 shares. And he's a young guy. I don't think he's wealthy. So I think he has probably vast majority of his net worth tied up in the stock. I might be wrong about that. Maybe he's a billionaire and I don't know it. But anyway, guys, welcome and hello, and welcome and hello. Want to say a big special welcome to Princess J. Not sure if she's on the live stream. She indicated she might stop by, but if you're here, honey, I love you. To the rest of the guys, I like you. Thanks for watching. But so what happened today, guys? Volume is back down. This is how you know the algo is just absolutely locked on. I mean, look at this. Look at this chart since the you see it well here. Look at this chart since the ER. You're coming in, it consolidated very briefly there at this exact level. One, two, three, it's basically two big gap ups, one, two big gaps down, one, two, and we're exactly where we started before the ER. Did market makers make money? Probably. Did retail investors lose money? Definitely. Did they dump low? Did they sell the dip and smell the rip? Absolutely, because that's what you turds do. You hand your money, you hand your hard-earned money to the market makers, panic selling at the lows when they create this panic over and over again. And guys, they stepped it down here, exact same thing. It consolidated here, went back up. They pushed it down just a little bit further here, scare the hell out of people, trigger the stop losses. Look at the day's range, guys. $6.74. Classic stop loss trade. For those of you, stupid turds that set your stop losses at those nice round numbers like $6.75. But this doesn't change anything, guys. The ERs are cumulative. These good ERs, these 10 good ERs in a row, these matter. It's like, imagine if you have, and welcome and hello, guys. Welcome and hello, and welcome and hello. Would be remiss and rude and just a horrible, horrible host if I did not say hello and welcome and hello. I have my 8th ex-wife on the line. Honey, you didn't get your I shouldn't make fun of Larry King. I think he's dead, but I used to love to watch Larry King. He'd hunch over in those suspenders. You could barely see him. He's like 90 years old. He'd been married 10 times. He's still working 7 days a week doing a radio show. Absolutely insane, guys. That was back when men were men. You just, back in he was like pre-Mad Men, pre-Great Depression, where you just, smoke cigarettes, get married over and over, just make hundreds of millions of dollars, have a 70-year career, and, look like some kind of crow in giant glasses. But I digress, guys. Who is here? Who is with us? Welcome and hello. Manny's weight loss. Congratulations, Manny. I wish I could lose some. Hey, Firehouse Pete. Firehouse Pete is here. Things are heating up. Hello and welcome and hello to you, sir. I am your Joe Rogan, Ryan Kaup, or Copy, or Kaup, or something like that. Steven Zunker. Hello, Steven. USA Medic. Happy Veterans Day. Awesome. Happy Veterans Day, Manny. Thank you for your service, good sir. Remember, I don't know if you guys are in the United States, we have an all volunteer military. So haven't had a draft in place since Vietnam era. So we rely on, people who volunteer. And as an American who has never served and has been kind of fat and lazy and doughy, most of my life, I would like to say thank you to Manny and all the other veterans out there, not just on Veterans Day, but every single day, because these guys are professionals, and I thank you. I thank you, Manny. I thank you, all the other veterans out there who watch my channel. Veterans, active duty, and other public servants as well. People pulling on the rope to make society better, getting up and working hard every day instead of just complaining and whining and being part of the problem. Let's thank those of us that get up early in the morning and work hard and make this whole mess work by pulling on the rope and being responsible and treating other people decently. Thank you. thank you guys for your service. If you're not only a veteran, but if you're just a decent person helping this society, I want to say thank you and welcome and hello and welcome. Alberto, Double D, I hope that's not a comment on my man boobs. I cut that off on purpose, guys. My man's here. My bro hasn't shown up. Thanks, Steven. I appreciate it, man. What's up? Baba Booey, not a lurker anymore, says Albertui. What's up, Beach Boy? Roy, what's good? Right after the ER, it was pumping. Yeah, you're right. You're absolutely right. I do remember you saying that, Roy. And you were absolutely right. I mean, it's pump and dump. It's dump and pump. My thing was, unless we actually somehow got a Hail Mary miracle gap net profit, they were going to attack the stock one last time. They needed one more bite at the apple. Sagig72, how much of an impact on SoFi if Biden promises student loan forgiveness? First off, I just don't think I don't think the demand is there. I don't think that's a hot button issue. They're going to be looking at issues, all these foreign policy issues. Abortion is going to be a big issue. Student loans, yes, I think they're still going to be kicking the can around, but I think it's more at the margins. I think Biden has adopted a strategy that they're going to go for that low-hanging fruit, which is the people who can't afford to pay anyway. The people who aren't paying anyway, the people who never finished school because they were in these scam trade schools, or the last one he forgave was like people with permanent disabilities, people that are blind. I don't think even Republicans have that much objection to some of these ones around the margins where people are really destitute or disabled and can't pay. I think that's a much better strategy than just trying to push through this blanket forgiveness for everyone below a certain amount, even if they have the ability to pay. I don't think that has a lot of support, amongst the responsible adults in the room. So I've always said I don't have a problem with some forgiveness for people who really need it, really can't pay, really got screwed over by, these dishonest trade or medical colleges. But on the whole, people need to pay back their debt, and student loans are a huge amount. The government is already absolutely drowning in debt that, I don't think, frankly, we can ever afford to pay back, and is choking the economy and is pushing interest rates up by competing, for debt in the debt marketplace. So I don't think it's going to have that big of an impact on SoFi. Whatever he says, I think people know that, the court is not going to let blanket forgiveness through. So it might delay things and stuff, but I think payments are here to stay, guys. I think the government needs this money coming in. The economy needs this money coming in. The fact that people are making payments again takes away money out of people's pockets. It helps bring down inflation. It helps reduce spending. It helps kind of get things back to, equilibrium where it was, where people before COVID, where people actually had to pay their bills. There's no holiday from bills. There's no holiday from money. And people were shocked when they opened their student loan account and those interest payments accumulated and their balance was back higher than it ever was. And they realized, hey, maybe I should have just kept paying, because all I'm doing is kicking the can down the road another 4 or 5 years. I mean, it hurts borrowers. This pause hurt borrowers. A lot of these people, okay, instead of your loans being paid off from when you were 35, now you're going to owe all this extra money in addition to being 3 years behind on your payments. Now you're not going to be done till you're 42. Congratulations, you're welcome. Thank you, federal government. And guys, I mean, it's not all Biden. I mean, Trump was president when the COVID thing started, and I don't blame Trump for COVID, but he started the student loan pauses. He started all these money printing programs, and Biden, was happy to continue them, enhance them, even more. And I think got past the point of the intent, which was this was about the pandemic. People couldn't go to work. People couldn't pay. It was a pause. After the impact of the pandemic was largely over, we're almost at full employment. They can't get employment to come down no matter what they do. They're trying to drive up unemployment, and it's not happening, month after month after month. Like, think about it. You have an express purpose for that student loan pause, which was the pandemic. And then, the liberal side wants to then use that as a pretext to just eliminate all student loans forever. Can we just have an honest discussion? It's not a pause. They just want to eliminate all this debt, which is not feasible. Am I the only one living in the goddamn real world where we cannot just keep running up debt? And it applies to both sides. People are like, oh, Brandon's economy is so terrible. Guys, both sides are completely fiscally irresponsible. Both parties spend like drunken sailors. And, the Republicans couple it with massive tax cuts that are targeted to people who don't put the money back into the economy. It just concentrates wealth. I'm not one of these anti rich guys, one of these wealth tax guys, but if Republicans want to cut taxes a lot, they have to get serious about spending. And it's very difficult to do because the two-party system doesn't even work. I mean, it's just our politics have become just such a shit show. It's almost depressing. Um, Clinton was the last president to run a surplus. I mean, that seems like forever ago. I was a kid, for God's sake. And the reason it worked is because he worked with the Republicans. They actually acted like adults. They're like, here's the math. We're going to cut welfare. We're going to cut entitlements. You're going to give us these concessions on taxes. And we're going to run a surplus. We're actually going to pay down the debt. Can you imagine today Democrats and Republicans working together and running a surplus and paying down the debt? It seems like such a far off fantasy land. It seems like, it'd be more likely that like I'd start laying solid gold eggs or something that will ever happen. I mean, we're running trillions of dollars every single year now. I mean, I remember when I was young, there was like a big, controversy that the debt had reached like 3 billion and then it was like 5 billion or trillion, I'm sorry. And then, now I think we're like 40, 50 billion. It just keeps, it's just almost like an abstract number, but it has real consequences for the real economy, for debt, for interest rates, for inflation, for all these types of things. Ben G, great points. I hope you're talking to me, Ben. Um, Alberto, not a lurker. You guys are talking to each other. It confuses me. Thatch, Anthony bought last year in the fours, ran in the early 12. He bought in the sixes. Yeah. I mean, he could have, he was just buying too. I mean, he knows when it's going to go low or not. Nodo knows. And guys, everybody wants to talk about the insider selling. Yes, the insider buying made some headlines, but who knows most about the numbers, the future, what's going to happen in Q4? Two guys, CEO Anthony Noto, who's like a second CFO, and CFO Chris Lapointe. Those are the two guys who know the company better than anyone. Those are the two people with the most direct influence, with the most power within the company. Of course, Noto far and away the most, but those are the two people who are buying SoFi. Noto is not giving you financial advice, but he's telling you, Tony notes, leaving you a note, buy SoFi, buy SoFi. I'm giving you a feedback. Buy SoFi, turd. No, that's not financial advice, you stupid turds. But anyway, guys, stock's down 5%, fought back very hard. I mean, pinned at 675, had these like 5 runs to 680, little runs, little 5-cent runs, little mini pump and dumps, little shakeouts, little repeated stop loss raids here. Then it kicks up to 680. That's how the algo's locked on. Then it tries to push 690, rejected back to 686, and then it finally finds the 690 to 694 range toward the end of the day. Volume very, very controlled, though there were some buys coming in on these little volume ticks, sort of the shallow bull volume indicator that we know and love. Just a little volume at the beginning of the day, very, very little, very slow at the end of the day. I've told you a million times, this is how market makers control the stock. They control it through borrowing and they control it through volume. There it is, guys. CFO Lapointe buys the stock. He has 827,000 shares. CEO Anthony Noto buys the stock 7.239 million shares. So he has, I think, 50 million, whatever that is. A lot of stock, even more than me, 50 plus million dollars worth. I wish. It's like, it reminds me of Father of the Bride. Are you Frank Hoffenheimer? He's like, I wish. I'm Derek Weinstein, his assistant. It's like a Korean Jewish guy with thick glasses. Funny movie. Steve Martin. Very good guy. Now he just plays banjo all the time. Not sure what he's doing with that. But anyway, guys, let's look at what the Sharts did today. I can't imagine it was like a big borrowing day because it just was so little going on with the stock. It was just very controlled, very controlled upward stepped up trading. So days to cover almost 4. That's back up. Short interest way up. Shares on loan up. So they did short the stock heavily again yesterday. That wasn't really showing up, but it looks like they did. So yesterday, looks like they borrowed overnight an absolute ton of shares. So they shorted the bejesus out of it overnight. And then they shorted the bejesus out of it again today. So borrowed change today is almost 4 million shares borrowed on only 29 million shares traded. So, guys, I mean, guys, who am I talking to? The Walking Dead? Or why are people upset? Why are people going, oh, you're so wrong about the SoFi stock. Don't you feel stupid? Sort of. No, I like, he's like, you don't always make, I know, I've talked so much about stocks I've lost money on. I'm, you know, I was there when PaySafe got cut in half from 8 to 4. I own shares. Like I've made bad decisions. And the point is, my trading philosophy over time is a winner, which is identify undervalued companies, buy the shares as low as possible, and just hold them. Unless something changes, just hold them. Stick to your guns. Stick to your thesis. Always be analyzing new information. Always be a critical thinker. Never get caught in that confirmation bias thing. Never get caught in a thought bubble. It's so dangerous. It's so dangerous to surround yourself with pumpers who always only think like you do. Every ER, guys, I'm looking at the numbers for weakness. I'm looking at the numbers for problems. One of the things they talked about, Tanner made a video on, was sort of how there's a lot of fear about the gain on sale margin. Though they were allowed to, they were able to sell loans. Not only one, they didn't make a good gain on sale margin, which is basically the profit you make when you sell or securitize a package of loans. It's a little bit complicated. I'm not a finance guy, but it's basically how much do you make when you lay the loans off. And then they're talking about the fact that SoFi had to assume some of the risk for these loans, which I know is true, but it's going to be one way or the other. Like if you're going to sell the loans off and you're not going to assume any of the risk, you're going to get less. So to me, that tells me that SoFi believes very, very strongly in the quality of their loans. And it's not a big problem. I think they would hold those loans on the books and they would make profit on those loans, make more profit on those loans, but they need to clear up the balance sheet. They need room and they need to continue to have plenty of room to make more loans. Maybe they have other acquisitions in mind. Maybe they have expansion in mind with Galileo. Maybe they have expansion in mind going into Latin America. Maybe they need to expend CapEx to really make a move into business banking and business lending. I don't know. But I'm talking about people who look at my philosophy and they go, oh, you're wrong because the price went down and the shorts attacked the stock. Like, why am I wrong today, guys? The ER was great. The ER was exactly what I told you it was going to be. And I'll go one more. I'll double down. The stock will move up prior to the next ER, just like I said it will. And it will move up after the next ER when that's a gap net profit and a lot better one than most people think. Why will it be better than most people think? Well, I'll tell you. Because SoFi is going to cut spending this quarter. Okay? Why can they afford to do that? Okay, so basically they can cut their ad spending, they can cut their customer acquisition costs. It's all because of football. It's all because of SoFi Stadium. It's all because of these concerts. It's all because of the organic name recognition growth, which is now in the double digits, coming from 1%. Guys, I'm talking myself out on a Friday. I cannot go on with this live stream. The intensity, the amount of energy, the zest, the je ne sais quoi that I bring to the table. No, I'm just kidding. I'm just a chunky monkey here in a palatial faux office suite talking at a bunch of nameless, faceless turds on the internet. Yeah, it's a demon, Roy. You got a demon in you. Not a lurker. Yeah, decompress, buddy. Take it easy. Moody's just cut the U.S. outlook to negative from stable after market close. Yeah, that'll be great. Thanks, Calv. Calv88 just coming in, peeing in the punch bowl. But it's true, man. Can't shoot the messenger. M. Russo. What's up, M. Russo? Good to see you. People talking so fast here. I can't get through all these comments, guys. I wish I get through all these comments. I'm just going to try to run through them really quick. Just in my mind. ENPH. A lot of people like Enphase. All in. Maria Fatima Almia. All in. I like it. Bold move, Maria. Congratulations. I am all in and then some. I am Given more blood and semen than the regulations allow, but told them I needed to buy more SoFi shares. Can they make an exception? And they said, "Oh, sure, you're an unhealthy-looking fat guy. You can donate blood and semen again." No, very little demand for either. But anyway, guys, Hybrid and Mr. Premium, what an honor. Bought the dip 720. You guys are just buying. The premium of the option. Tons of options writers in the chat. There's a lot of big wigs in here. How you guys doing? All you guys know more about options than me. I just do some covered calls here, guys. Occasionally cash secured puts, but I'm not in any type of major options guy. So you guys will have to do a little circle jerk on that one down in the comments. Say Gig 72. Thanks for addressing my question, but I'm not sure I agree with you. The fabric of this country ain't what it was. Government cares for re-election. Yeah, I mean, I don't know. It's some of the people do, some of the people don't. Some of the people on both sides actually care about the future of the government, and some are just self-serving turds, guys. It's not. If you think being a self-serving piece of shit turd is like party specific, you're not paying attention to politics. But I definitely agree with you that the Democratic side wants to take away more responsibility, give people more of a free ride. That's not sustainable. I'm not saying the parties are the same. I'm saying they're both horrible in different ways. That's my opinion. But I'm not a say gig 72. The whole point is have your own opinion. It's not to agree with me. I don't, I'm just giving you sort of completely impromptu, off the cuff thoughts. So a lot of times when I get on here, guys, I talk really fast. I say like 5 billion words. I don't even know what I said. I have no idea what I said. I'll go back. I'm like, I don't even really, agree with what I said or the way it came out. So guys, take it with a grain of salt. I have these are my, these are my notes. I mean, you can't even read. This is worse than a doctor. I mean, I can't even read anything I'm saying, so I have no idea what's going on. The other thing I wanted to say with regard, I know this is all over the place, guys, but with regard to insider selling, these young executives that are selling these risk offs, people like, well, they're young. These guys move jobs a lot. We are not in the days where somebody would sign up and work 35 years for IBM, or, maybe you're born out in Bentonville, Arkansas. Maybe you just got a PhD from Bentonville Junior College and you work for Walmart for 67 years. Those days are not here. Like, these people are in high demand. I was looking at the guy we like to hate on, the chief technology guy. He's a Harvard guy, like in Harvard, MBA plus MIT. I don't remember exactly, but it's like one of those things. Like a guy who has an MBA and is technical from MIT, you're going to be in demand. You're going to make a lot of money. You're not going to be married to the company just because you're working for them. So I really don't think people should be so shocked when some of these young insiders sell their shares. Like they're not cultists like we are. They're not sitting around, hanging on every word of some fat guy online just because they want to, make themselves feel better about their decisions to be neck deep in the SoFi stock. Like, you freaking turds. I need a drink of tap water. God, I'm tired. All right, who else is here? What the hell else was I talking about? Oh yeah, I had some crap written up here. Okay, this is a note about people like, oh, you were wrong. What is the bear case? Do you notice a few things, guys? It's always short term, and it very rarely has anything to do specifically with SoFi. Okay, look at interest rates. Okay, look at defaults. Look at the selling of loans, gain of sale margins. These are transient, temporary factors. Interest rates will stabilize and go down. The economy will right itself. Defaults never even got high for SoFi. They are creeping up other places. Selling these loans, gain on sale margins. The fact is, there's going to be a secondary market for loans, whether it's securitization, selling the loans outright. And in that market, within that market, betwixt and between that box, the people with the highest credit scores and the best qualifications, those loans are going to be at the top of the heap. Those loans are going to be worth the most. Yes, when you're going into a period of uncertainty where there's rising defaults, unsecured loans are not going to be the hottest product on the market. They'd rather have an unsecured loan from SoFi than a secured car loan from CarMax or one of these fucking places. I mean, you're looking at a sure repo, and the car's probably going to smell like blunt smoke. These fucking morons who are financing at 35% interest rates, you have your head examined. Take the bus. Buy an e-bike, you turd. Don't just buy some stupid Dodge Charger with rims to get the thing repoed, then go down to rent a wheel. What your idea of fiscal responsibility is putting least 26-inch rims on a Charger you finance, a V6 Charger with exhaust tips with high miles that you finance for 96 months. This is what America's come to. Bunch of idiots. Let's see. Yeah, I know James Brady, it barely broke 8, but wait for net profit. That is going to change. I'm telling you, people are like, well, they'll just attack it at net profit. Um, you know, maybe, but over the long term, results will matter. And that's what I was talking about. I didn't get to it with a cumulative effect. Imagine this is like a wine barrel or a 55-gallon drum or something, a big container of water, okay? And there's a hole at the bottom. I have a rain catchment barrel. I'm catching all my rain. Guys, sorry, I'm ranting so hard. I'm breaking a sweat here under these LED, bright LED lights. I'm the shiniest man on YouTube. But guys, what was I talking about? So say you have, you know, this is our results, guys. This is an empty bucket. So the shorts, the bears, they put their finger in the hole and they say, okay, we're going to hold this water in. We're going to hold the results inside. We're going to stop any water from coming out, which would be the stock actually moving up. And then, 2022 goes by and SoFi keeps growing. SoFi keeps making record revenues. SoFi increases EBITDA and they pour that ER in. Nothing comes out the bottom because shorts are holding it back, but the pressure builds. And then you get into 2023 and everybody thinks the stock's going to fall apart because of inflation, because of defaults. Yet quarter after quarter, it does not happen. And SoFi keeps turning in ERs with better and better revenue. Their margins are improving, more and more EBITDA, always raising guidance. What companies through the tail end of the pandemic in the fintech space put together like 10 good quarters in a row? I mean, I'm not saying, again, they're all home runs, but how do you win a baseball game, guys? So my point is, back to this stupid water analogy, 3 more good quarters. You dump the water, and eventually you're not going to be able to hold back the pressure because it costs too much, because there's too much weight here. The cumulative weight. Another stupid analogy would be a baseball analogy. I think I already used this one. You can hit a grand slam home run. Maybe you're a firm and one quarter you hit a grand slam home run, the stock goes up 30%. Maybe 2 quarters ago you completely crapped the bed and, the stock went way down. SoFi is just hitting singles and doubles and you still score more runs. You score more runs with 10 base hits in a row, 10 singles and doubles than you do with one grand slam home run. Especially if you're the kind of hitter who you hit a grand slam home run twice and then the next 5 at bats you strike out swinging because you pull your head out of the box, swing back on your heels and just swing for the fences like some kind of freak, like Baby Ruth. Or who would be a good example of a hitter like that? Like like Mark McGwire. I think one year he had like 60 home runs and is hitting like 220 or something. But I mean, he could probably barely see over his lats and shoulders. That guy, I remember, I remember in California we had minor league baseball. It'd come up and down the state, and I saw Mark McGwire when I was a kid. Single A ball, and I remember him, and he was big ginger, corn-fed country kid, but he was a beanpole, man. He was like 6'5", like under 200 pounds, and then with the steroids, like the guy put on like 80 pounds of solid muscle, looked like fucking Brian Bosworth or something. My, looked like Thor Magnusson from World's Strongest Man, Magnus for Magnuson, or one of those guys, the Mountain. Anyway, guys, blah, blah, blah. I totally forgot what I was talking about. Baseball analogy, water analogy, the cumulative effect of these ERs. They do not just dissipate into the air. That's what everybody thinks. That's why they want you afraid, confused, angry by the price action. That's why they don't want the stock consolidating. That's why it keeps bouncing off the support line. One other note, guys, I forgot about this this line here, this here line, reminds me of this here place. But this here line, that support, notice it actually caught resistance on this pump and dump. It makes the line even more significant here. And then all the way over here, it actually consolidates along this line 4, 5, 6 points, and then way over here when the stock first introduced as a, I don't know, this is I guess after the IPO before it shot to 20, couple days there, but I think that's because nobody could buy it or something. There's kind of shenanigans. But again, I just go back to this chart, guys. This is unusual for a stock to come down at this sharp an angle and test the support line 6 times for no apparent reason. Why all the volatility? Because the algos, the market makers create the volatility because they can make money so many different ways. These are all little pump and dumps, guys. You know, civilians are buying in here. Civilians are buying in here. Look at, you know, market makers are buying and covering here. Civilians are selling here. Look at these giant red candles. This is a capitulation event. Here they hit you with 3 huge red candles, push it below support. Oh my God, what's going to happen? Then the next thing you know, there's this giant 125 million share day. Market makers are coming right back. It's not that complicated, guys. They're getting you to buy high, not you, because you're smart, beautiful, wonderful, handsome people. They're getting stupid returders and then swing turders. They've already shaken out the swing turders. Swing turders thought they were, you know, this thing would pop back to 10. Now they're giving up. So these are capitulation events, guys. These handles, these gap downs. And Zacks came out with a story the other day. It's like, oh, it's a hammer. None of the normal charting applies to these situations, guys, because that implies like rational people are finding, you know, support and resistance, and the charts rely on rational behavior in response. This is not rational behavior. This is just mechanics churning and, you know, basically washing people out, sucking people in, getting people to buy calls. I mean, this week, guys, the calls didn't print, of course. I mean, you had some of these 650 ones came in later and these went up, but this was very late. This was like today. These $7 huge open interest, 14,000 contracts, 14,000 at 750, 18,000 open interest at 8, 18,000 open interest at 850, 10,000 open interest at 9, guys. I mean, come on. That is a lot of money. Idiots are just handing to market makers. If you've got to buy options, buy leaps. Give yourself time. Don't just shoot yourself in the head with time decay. You fucking idiots. God, I hate you guys. No, not really. Again, present company excluded, of course. But the puts, I mean, I think they were expecting to drive it even lower. There's 47,000 open interest, $6 on the puts, 10,000 open interest at 650, 9,000 open interest at 7. So those didn't really print. I mean, maybe made a few cents, but these printed at 750, and this is only 12,000 open interest. It doesn't negate the fact that the $6 puts were so far out of the money. I don't see a clear winner here. I'd have to know, of course, who was buying what, who was hedging what, but, you know, bulls and the bears basically on the price action, on the pump and dump, on the options. It's been a little bit of a Mexican standoff, a little bit of a stalemate. You know, because you had everything set up for a short attack to push the stock down below 6. But what happens? You get a great earnings report showing tremendous growth, tremendous progress, and I think all but assuring the fact that they're going to make a GAAP net profit in Q4. What did I tell you was going to happen, guys? They're going to put everything bad in Q3, and Q3 is not going to be the net profit. And, you know, I wasn't expecting that big write-down, which I think a lot of us assume is from Technesis, that they overpaid for Technesis. You know, so everyone was kind of expecting this, whether it be now or later. So they did it in Q3 because they've been promising that GAAP net profit in Q4. Everything's been leading up to that. The numbers all look extremely good. I think they're going to cut down the ad spending, cut down the customer acquisition costs, rely on SoFi Stadium, rely on their current customers, current deposits. Direct deposit will still grow deposits. They're still bringing in customers organically because they're paying that very high interest rate, which they can afford to do because of their cost structure. They don't have branches. They don't have the legacy costs of all the other banks. Okay, guys. As far as people's religion being price action short term, I think it's very foolish. I tried to tell you, what do I look for? I don't know what else to have you guys look at. Same thing. There's no new ratings, nothing particularly new on Seeking Alpha, nothing particularly new or fascinating in the news. Let's just see where this turd is landing after hours. Yeah, still down 5 cents. So the algo's still locked on. You kind of figure it would lock on to 690, locked on to 675, locked on to 680. Kind of skipped 685. Didn't really lock on there, and jumped up to 690. And basically, it's sort of consolidating there. So after hours, 689 doesn't bother me at all. Coming up from the low on the day of 674 actually showed some decent strength, but don't forget the market was bright green today, guys. Nasdaq up 2%, but Affirm was way down, but they were up 20% or 50. So they still have a gain from their earnings report. Upstart continues to tank. Their earnings report was an absolute bloodbath. Affirm, I think their market cap's actually higher than SoFi, which they're way further from making money. They're never gonna make money. They're not. Why do I like SoFi? If you guys couldn't tell by now, I like the SoFi stock. Where do I look for growth? This is why I love this sector, guys. Not only in banking and lending, software as a service, there's massive margins, but there's unlimited room to grow. The U.S. financial services these are industries, or SoFi is not even a blip on the radar. Yes, they have, I think it's 7% of the originations in personal loans, and yes, they have like 60% of the student loan market, but in mortgages, they're just scratching the surface in terms of checking, savings, banking, credit cards, all these other things they're involved in. They haven't even started to grow yet in terms of the tech side with Galileo. But I'll just tell you, if your religion is price action, short-term price action, more power to you. Swing turd, day turd, do what you got to do. I've tried those things. I can't make it work. The only thing that worked for me was identifying companies that are going to be huge in the future, that people have disdain for now, that people are irrationally anti right now, and I bought them. It worked for me with Tesla, Amazon, Apple. It worked for me with some of these huge stocks. I'm not saying I didn't time all of them perfectly or anything. Some I got out of some shares too soon. But overall, that has been my philosophy, guys. Identify stocks that have a great business model, a great future ahead of them that the market is irrationally discounting, and then buy them hand over fist. Buy SoFi. If you buy SoFi when it's down the fours, low fives, that was the time to buy. It's a good point right now. But the point is, guys, they pushed it down into the fours like 3, 4, 5 times. Take advantage. Take advantage when there's nothing fundamentally wrong with the company. So, guys, it's not just the right industry, the right sector with huge margins and huge room for growth. It's the right timing. People are ready for fintech. Coming out of the pandemic is the perfect timing because people are embracing at-home banking. I was watching an interview with Jamie Dimon from Chase, and he's talking about how they're evolving. Yes, they're still building branches, but he's like, we have to face the reality that pandemic accelerated greatly the transition to digital banking. And he was basically talking about, how they're going to take on the fintechs. It was a really good interview. Actually, Jamie Dimon is a smart guy. I like the guy. I like Noto more, but Jamie Dimon, you notice like all the other big mega banks, they keep turning over their CEOs over and over and over. And Jamie Dimon's the only one who's there like decade after decade. And I think it's because he's very, very good at what he does. And Chase makes a hell of a lot of money, and they're the biggest bank in the world. Besides right time, guys, great business plan. Great business plan, great diversification, and the ability to adapt. That comes down to great management. The right timing, the right business plan, the right sector. None of it does you any good if you don't have the boots on the ground that can implement the plan. And more importantly, when things go wrong, when there are setbacks, can they adapt? Can they solve problems? Are they creative? Yes, yes, yes. We have the best management team in SoFi. So all these short-term things that the bears cite, interest rates, defaults, not ability to sell loans, none of that will persist beyond these high interest rates. They're not talking about structural problems with SoFi. They're not telling you why SoFi's management has made bad decisions. They're not telling you why SoFi's business model is bad. They're just they're just spreading FUD. They're just throwing enough shit at the wall and seeing what sticks to SoFi. And it's not sticking because SoFi continues to turn in good ER after good ER after good ER. And that's a fact, guys. Let me go to a few comments. I'm losing my print more dollars. Good idea, manager. We don't have enough debt out there already. That'll help inflation. I think he's being facetious. They will never work together. Not a lurker, I agree, but they did it. They did it under Clinton, maybe because he was like a more of a good old boy. I don't know what it was, but a lot of the Republicans got along really well with Clinton. They made it work. A lot of the Republicans actually got along quite well with Obama. He was very, very good friends and wives with the former President Bush. This is how things used to be in our politics, guys. Like Tip O'Neill and some of the, like Bob Dole. These guys used to go out for drinks and they used to make things work, and we had a government that functioned. And I'm not trying to blame one side or the other. I'm not trying to blame Trump or Biden. I'm just saying things have evolved to a point of dysfunction. And it is very, very bad for our country. And it's time we stop blaming and demonizing and start actually solving some problems. And one of the things we need to get our head around is this debt. And that's why I think just blanket student loan forgiveness is just pure insanity. Not just when it comes to the debt, but when it comes to inflation, when it comes to just too much money supply, too many dollars. I mean, for God's sake, we're just flooding the market with dollars and it's not really working. And they had trouble selling the bonds last time. They got to pay higher and higher rates to sell these fucking bonds. And as somebody noted, I guess they just cut our credit rating again. Michael Hagan, Mikkel, I think empires evolve. I think the United States still has the biggest economy in the world. Everybody's saying China's going to pass us. I don't think that's going to happen anytime soon. Our economy is extremely resilient. If you look at the United States, we have all these little cities that have major hospitals, colleges, our highway system, just our infrastructure, our strength that we've built up over time is absolutely immense, our economic strength. But as a people, I feel like we're kind of losing our way because, we're just so consumed with like self-pity and bitterness and hate and blame that we just can't see the forest for the trees. And that's that we're so fortunate to be Americans. And we should work together and we should be willing to sacrifice and we should solve problems and we should be human beings. But we're also caught up in ourselves. We're also caught up in being victims. We're also caught up in blaming. We're also caught up in, putting together an enemies list and punishing our enemies. Like, guys, I don't know. I feel so fortunate to have been born in this country and to be an American. It just really pains me that this is what we've come to. It's very, very unfortunate. Guys, this isn't meant to be a political show. Obviously, it's supposed to be about stocks, but it's more about me, using you guys as my shrink. I'm laying down on my couch here, my Dr. Katz squiggly lines. 75 people watching. Need more. What do you say? Yeah, Tyler Self, you could be on my ticket. Me and Tyler for president. Crushed 657. Very nice. Hello. Again, back this Uncle Bruce dude out face. I cannot figure that one out. I guess that's who got people into SoFi. You can blame Uncle Bruce. Benjamin Murphy, 675. That's the new low. I'm out of extra capital. Yeah, I mean, tiny home. Yeah, tiny home's a lot safer than stocks, man. At least you can live there when the shit hits the fan. Save heirloom seeds and 500 million pounds of freeze-dried food. Not a lurker anymore. Yeah, 657, man. Nice call. Guy knows what he's doing. Mr. Premium Option. You guys are talking to each other. I'm not going to read the comments that are not to me. Had to sell 130K, lighten it up, drops below, I will be buying, rolled up $5. Yeah, 130,000. Very nice. Okay. I mean, guys, I understand. You got to reallocate. You got to, you got to play with your allocation. You don't get married to a stock. If it makes sense for you to sell some of your SoFi, sell some of your SoFi. I'm not trying to tell you guys what to do. I'm not going to yell at you. Oh, shame, shame, shame. Guys, it's just a stock. It's just money. Like, don't get married to it. Don't get angry at people who short it. Don't get angry at people who don't like it. Just play your game, guys. Don't get angry at other things. It doesn't do you any good. How about selling Palantir to get more SoFi? You would have liked to sell it a while ago, but it went way up today. So I think a lot of people were probably making that flip. Cash secured puts, more cash secured puts for Alberto. The guy's always on top of the options. Get with me on Discord. You guys, hey, I joined. Somebody invited me. I think not a lurker. I'm on a Discord. I don't know how to do Discord, but I am now on a Discord, and I have the Discord app, and I am an official Discord member. So if you see my little icon, my little green shirt money hat guy, say hello. It appears chart next technicals. Yeah. Heirloom Cedar, it appears the chart technicals could take SoFi either way. She's ripe for more abuse. Yeah, -3 was the real number. Yep. I'd like to see Noto buying even more, but you know, the guy's got 51 million stock, $51 million worth of the stock, so you can't say he doesn't have any skin in the game. Bank of America, Plane Ride, Downside, Sledgehammer by Peter Gabriel. Good song. Peter Gabriel. It's good stuff, man. I haven't heard any Peter Gabriel in quite a while. I am really liking SoFi Savings Home Loans. Yeah, me too. I really like I really like the app, guys. I'm not saying it's everything. I'm not saying it's perfect, but where they're going when they get there is going to be phenomenal. And they're not there yet. It's not my, major trading platform. It's not my number one bank. I have like 4 more banks, but yeah, we built SoFi, pay huge taxes, go SoFi. I agree with you. You have to sign in the Discord. Yeah, I did sign in, I think. I have to go back on my app, but I joined the group. I'm in, so I will sign in and see what it's all about. But guys, I don't have any more energy. I am absolutely wiped out. What a week. I guess what can you say? Like, the stock came into the week at 772, so it's down 80 cents on the week. But if you look where it came into the ER, it's basically exactly where it was. Shorts are in even deeper. They borrowed a ton of shares. I think the stock is going to move up into the at least 950 prior to the next ER. That's, my opinion. I think everything, like I said, I've told you guys this a bunch of times. Everybody laughs at me. That's fine. Everything below this level, below 825, 830, was just pure mechanics. And it's no coincidence that the resistance was there again. The market makers have decided to hold the stock in this little range right now. This 825 down to 675-ish, and they pushed it down, as Hybrid Duncan noted, to 656 or something. But the major, kind of bulk is there, 675, 690, just fluctuated in there. But guys, I just look at this price action. I'm like, this is not buyers and sellers. This is people being forced out of the stock, stop losses and panic and stuff. But the people holding the stock with stability for a long time since IPOE, who held down and added more in the 4s, low 5s, they're not going to be scared and dump at 675. I mean, yes, they can make money churning this stock, but I do think they're going deeper, and I think they were counting on a weak ER, and I think they're counting on SoFi to fall apart, their loans to fall apart. And these guys with these 17-part things on Twitter, it's mostly about macro, external things that are not SoFi specific, don't really apply to SoFi. I just don't see the doom and gloom, guys. I think they've hit it as hard as they could. They borrowed as many shares as they possibly could. They borrowed another almost 4 million today. They borrowed, so there was 15 million they borrowed twice. And then when you look at the data, guys, days to cover, it's almost at 4. This is higher than it's been. I mean, 3 months ago, it was 2. Short interest was just down just over 100 million. And now today popped to 117 million shares, guys. So that's the most I've seen short interest in, at least since back here, since end of August. So there's a big short on the stock after a great ER, heading into an even better ER. Doesn't make sense to me if you're a short. Me being a long, it makes perfect sense. I love my position. I don't love the price action, but I can't control that. You know, what are they saying? Like Alcoholics Anonymous, like, or I forget what it is, like learn to, the control the things you can't and the wisdom to know the difference and that sort of thing. It's like, guys, don't worry about short-term price action. Worry about the things you can control, your analysis, your decisions. Pick your entry points and play your game, and don't let anyone push you around, whether it's market makers, hedge funds, shorts, or big fat loudmouth idiots on YouTube. Guys, I'm going to keep this thing under an hour. I tried to keep it under 20 minutes, but obviously that was an epic fail. Hope you guys have a great weekend. Remember, don't worry about your stocks. Don't even think about them. All your troubles and worries will be right here waiting for you on your desk on Monday. Didn't you get that memo? Guys, remember, finish up your TPS reports, turn them into Lumberg, and then sneak out the back door and go fishing before he can force you to work Saturday. And, Peter, by the way, we're also going to need you to go ahead and come in on Sunday too. Guys, thank you. Have a great weekend. I will talk to you soon. It's un Poco, Moss. It's DannyDealz. It's a SoFi stock. It is 11/10/2023. Have a great rest of your Friday and great weekend, folks. We will talk at you again next week. Peace.